Good afternoon, everybody. This is John Seville, and this is your executive summary. So we're going to kick off looking at stock setups for tomorrow, and of course a review of the current market conditions as we continue higher above open range. For the fundamental backdrop, Strath was in trading room last week and said, look, obviously the market could go higher here, but not. But the big expectations, what's happening in the middle of this week. So Strath joins us for today's executive summary, and I'm going to pass the mic over to Strath for kind of an update on the backdrop and what's going on. Strath.
Yes. Good evening, everyone. We've had some astonishing activity in the market the last 2 days. And this is not the first occasion that we've seen this type of activity. On the 17th of September, when the Fed announced that they would not be raising interest rates, the market went crazy that day. It was up and down, and they ran the S&P as high as 2019 on that day. And then the market fell apart, and it closed that day at 1971. The following day, it gapped to the downside, and we went down for a test of the 1900 level, and the market has been jockeying back and forth ever since. Then on Friday, of course, we got the jobs report. It was a clunker. Not only was the number far below what the market was expecting, but the previous 2 months were downgraded by 60,000 workers for each month. And of course, the market sold off sharply on Friday, but it bottomed out at 1895 on the S&P. Now, the feature of the day, according to floor traders, there were an absence of any significant bids, and there was an absence of any significant offerings. In those type of markets, vacuums develops. There are no buyers, or there are few buyers, and there are few sellers. And in markets like this, they're dominated by high-frequency traders, and a high-frequency trading program runs on algorithms, and programs are triggered by a specific price point, either on the upside or the downside, and a buying program begins or a selling program begins. The Dow on Friday had a low of 258 points. Before the day was over, it closed up 200 points. We had another sharp rally today. The Dow ended up 303 points. So from the low on Friday to the close today, the Dow tacked on about 775 points, an astonishing rally. But we've said to everyone all along that rallies in bear markets are far more spectacular than rallies in bull markets. Now, this is a great learning experience for everyone. You learn that you must have respect for the market, and that the market's not going to go your way every day, and it may turn on you rather violently in the short term. So when you're trading, and we always say you're trading with risk capital, whether you're in options or whether you're trading the market. But on a program like we have with the Big One strategy, we fortunately got in right near the top when the market was at 2,080 to 2104. And that's where we got a lot of positions on. And I mentioned that for a reason. But I'll get to that later. but we've had excellent success. Almost every position that we've had on either turned a profit or is we have an excellent paper profit on it. But I said on Thursday in trading room that I didn't expect the market to break until Wednesday of this week. That'll be on the 7th. And the reason I said that is that there's an IMF meeting in Lima, Peru this week, and we should be getting a statement from that. And it's got to be rather dire information. I saw Christine Lagarde, the president of the IMF, being interviewed last week, and during that interview, she diplomatically requested that Janet Yellen, the chairman of the Fed, not to raise interest rates, that there were very difficult circumstances in several emerging markets, and that an increase in interest rates and a surge in the U.S. dollar would have dire consequences for those economies. Now, there are several of them. There's Indonesia, there's Malaysia, there's Thailand, there's Brazil, and possibly even Turkey at this time. We've had no bad news yet, and yet the market has been selling off. So usually a significant move in a market is triggered by a catalyst, and I believe that the catalyst will be the IMF report. Now, so you have to be patient with these positions. The beautiful thing about puts is that your risk is defined. You can't lose any more than what you paid for the options. And when you're diversified, if you have a couple that don't pay out or you lose money on, the ones that that really work will cover any losses or setbacks many times over. And I have gone through all of the positions that we had on previously and still have on, and there's none of them that I would change my mind on. Now, I know there are a couple of people who have still have positions on in Las Vegas Sands. Now, we had some of that on, or I did, and
I did
we
too. Yep.
took our. I took profits at first at 43 and then at 41, only to see it go down to 36. So it didn't look too smart then. But in the last 2 days, we had a huge rally in the casino stocks, Wynn Resorts and Las Vegas Sands. But that's based on a rumor that the government of China is going to support junkets to Macau beginning in December to support the economy in Macau. I don't believe that story. It hasn't come from any government official. And Xi Jinping, the president of China, hates Macau. He believes there's a lot of money laundering going on. They can't keep track of the money. The casino business is dominated by American Casino, Wynn Resorts, and Las Vegas Sands, and he doesn't like American companies, and he's always given them a hassle. So Wynn Resorts report on the 13th, and I don't know if it's before the market or after, but the revenues in Macau have been declining for several quarters now. But in the last 6 months, they've declined dramatically. The junkets to Macau have dropped sharply. The take has been terrible, and I expect, and also a lot of Chinese high rollers who play in Las Vegas. Many of them have stopped playing, and the same holds true in the high-value merchandise business like Tiffany's in New York. The Chinese trade has dried up substantially. That stock's down from 96 to about 77 or 78. So it affects a lot of areas in the economy. So I have a feeling when resorts or when Las Vegas Sands report on Tuesday, it'll give up everything it's gained in the last couple of days. If I had a position in it and I was offside a bit, I would just stay with it. So anyway, I've reviewed all of our positions, and I'm satisfied with all of them. Not all of them are going to work out. It's almost impossible to be 100% right 100% of the time, but there we are. Now, I just want to give you my experience in trade. I've been around markets for a long time, and I can only think of, I carefully think out a situation before I get involved, but I can only think of 2 or 3 positions that I took on. I started making money right away, and the stock never looked back. It just kept going, and it got to where I hoped it would, and I took a big fat profit and walked away. Most of the trades that I've had backed and filled, and then there'd be some incident in the market, and the market would turn against me, and I have got taken to the wall 7 times where it really tested my mettle, and it scared the wits out of me. And I don't mind telling you, I got shaken out several times, and only to see the position turn around and take off, and I missed a big profit. So that happens. Like, this is an educational program, and this is what you've got to learn to expect. Markets don't go straight up, and they don't go straight down. And every position that you put on, which could be a perfectly good position, doesn't work out immediately. It might have you biting your fingernails and saying, geez, I wish I'd have waited for a couple of weeks before I jumped into this one. But you'll learn that as you're trading. Making money in the stock market is not always easy. And if it was, the markets wouldn't work. If everybody could do it, it would be hard to find somebody who's going to lose. So my feeling is that this market, we've had this violent rally. I think we get into earnings seasons in earnest next week. We'll be getting reports from the big banks. And with all this big rally, the big banks haven't really participated. And it's not only the big money center banks, but the regional banks like PNC, which covers Pennsylvania and that part of the country, BB&T, which covers the Carolinas, SunTrust banks, which cover Georgia and Florida. None of those stocks are going anywhere. So unless the financials are soaring, this market is not going very far. And looking at the rally today, look who led it. IBM was up $5 at one point. That's 30 Dow points. Caterpillar was up $4. That's 24 Dow points. There was another one. Cummings. It was up $4. That's another 24 points. And there was another one that was up 24 or 30 points. So 4 stocks made up more than a third of the 300 points. And look at the caliber that was leading the market. IBM is a dud, bad management. Caterpillar depend on the mining industry for their livelihood. They've announced last week they're cutting production dramatically, and over the next few months are laying off 15,000 employees. So you think Caterpillar is going to lead the market to new highs? Cummins Diesel, great company, make the best big diesel engines on the planet. But this is not the time for diesels. And if you look at the trucking industry, PACCAR, which is a big specialty custom-made truck company, used big diesels. their stock's down sharply. Uh, uh, the other big truck maker, what used to be the old International Harvester. Anyway, it's down from $30 a few months ago. It's trading at $13. So the truck business is not exactly healthy. So just be patient here. Let's see what happens the next 2 or 3 days. I have a feeling this market will break to the downside. It'll probably find some support until there's another catalyst. But once it breaks support, I'm convinced it'll fall apart. That we'll be down to the low 1700s before this market starts looking for a bottom. Anyway, that's my take on things. I hope you'll all be patient. Treat this as a learning experience. Be a little patient here. Most of the positions that you hold, I'm quite confident that they'll work out very nicely for you. But just see it through here. That's all I have to say for tonight. Anything else, John? Hello?
Yes, Strath. Yes, well, sorry. Thank you, Strath, and we'll see you in tomorrow's trading room, and I'll go on and review a couple of the stocks that we are watching currently.
Okay, sounds good. Good night, everyone.
And so, look, I mean, this is just, again, a quick review of some of the stocks in play. Obviously, Arden was one of the picks last night that it was a, continuation from a pick a few weeks ago. We said that, look, this looks like it would rally up into $11.75. Then it would bounce down, hit the moving average, and rally through. So last night we talked about picking this up if it broke $12, and then we... then we have we selected today, sent out a text message alert and an email alert that we consider taking profit here at 13. The reason for that was, well, it's already basically a 10% move in one day. You can't argue with that. It's running right into the moving average. So this could certainly be another potential entry point if it pulls back to $12 again tomorrow. But that was a really nice run, and obviously big bars like that. It's at moving average resistance and a long way away from support. So the risk reward is 10 cents more reward till we hit resistance and $1 of risk before we go back to support. So that was an excellent intraday one-day trade if anyone played that. And of course there's options on that as were probably a little bit too thin, but as a stock trade, beautiful. Gold, I also mentioned was at resistance and would be a short-term target one. So if you were in on the options, from 275 they were up to 410 earlier over the last 2 days, and so basically, that's a decent run that I felt worth considering a potential profit-taking target. So now this could always pull back. We still believe this is a longer-term good position. So a pull back down to 62, I'd look to re-enter that. But again, Strath's previous comments are about the long-term picture, and and I am in a lot of those positions myself in terms of those long-term trades. So I just want to also bring you up to speed, however, on the some of the short term. So because that's obviously how we play the market. We want a nice combination of long and short-term position. SSP also continued to have a good day today. This is the one that's had the insider buying that I mentioned last night. I still believe that this is also a half-decent short-term long. Again, I talked about the stop criteria. I'd be putting the stop-loss criteria in just below 16. Well, we've rallied past that point now. Let's have a quick look. So this one here, I'd be rallying the stop loss up below the 9-day moving average. So now at 17.53, so I'll be looking at 17.47 on that one. Okay. Now, well, some of the other longs we talked about. FTAI. You can see this one Started to pick up momentum. So that there's these individual plays that this is one of the ones I mentioned last night. This one's playing off the 5-day moving average at 13.19. So I mean, this kind of, again, any kind of pullback to support. This one's got the potential to move up to this moving average and pull back again. So I'd be very conservative on the entry, wanting to look at the 5-day moving average, and then these things I'd be looking at the type of runs to the first level of resistance. So looking at the 1350 as the support zone, and like a target of like 1450. You've got ATI, which we talked about last night as well. Of course, that one ran away. You wouldn't have been able to get into that today. That was up 6.59%. However, I wouldn't chase that one yet. I'd be looking for a pullback. And obviously, we want to be very cautious about. It is a dangerous market for longs and shorts right now, because we are rallying right up into that resistance area. So any positions that I'd be stock trading right now would be very short term, and I want to make sure that I've got very tight stops. So this is something that is rallied up. We'd need to get a much better entry point for me to want to chase into that one. So that one was really untradeable today. The one that had FTAI was a great move, but the best one that really just took off. I got emails from a few people who traded this today. Educationally, this is a what we call a bump and run formation. Those of you in the patterns and probabilities class, we touched on this on Wednesday. So this is one of the highest probability patterns that exist in the stock market, and it's where you get a channel down and then a drop, basically of about 60 degrees or more, and then a flat base, and then a scoop up. This is my favorite, one of my favorite patterns to trade, and you can see it basically looks like a spoon. So there's the handle, there's the spoon, and it scoops up. So this morning opened at 10:45 and just went straight up from there. Now what will typically happen then is it'll rally up into this resistance area, so up to about 11.54. If you traded this as a long, and bought into this, then I would be looking at basically kind of 11.46 as a or even 11.35 as a sell point, and then I'd be looking for the pullback to the 5-day moving average on CAI. So now the secondary, so there's a possible re-entry there on the moving average when it pulls back, and then the third possible entry is when it breaks through the spoon. So that's the bump, then it pulls back, and then it runs, and then sometimes that can get, if it can cross the 50 at the same time it crosses the trend line, then you get a really big move. So there's CAI. I mentioned HLX as well last night. This one had a good move, up 7% also. So if you're trading that had a really positive move again. I'd be locking the stop loss now in basically below the moving average. It opened at 556, so I'd be having the stop criteria basically just below 532. In terms of a target, I would be looking to take some short-term profits here before it hits the moving average. So 637 would be more than enough to satisfy that. That moving average comes in here around, 660. So yeah, that gives it enough room to breathe. SALE was another one that I came across. This one's looking quite good. And so, I mean, I'd be looking at, again, the 9-day moving average, 863 as so like 867 as a possible entry criteria. But I'd be a very tight stop. I'd be putting let's have a look here. So yeah, 867 is a possible entry. The low was 873, so it might not get that low. We might be looking a little bit higher than that. So we're looking at the breakout point here. 5 days at 866. Low was 873. So we're looking at basically the low of 875 as a stop criteria, an entry criteria, and a stop criteria at say 861. So looking at very tight stops. because I'm not afraid to take a shot at some small. Strath doesn't want to take any short-term trades on the long side. I'm happy to, as long as they're very tight stops. So I mean, if I can risk 1% to make 10, I'll do that. And if all 3 or 4 of those trades fail, I've only lost 4%, and I'm happy with that. And of course, if I'm losing 4%, it means the market's correcting back to the downside, so I'm making really good money on the shorts and the puts we bought. So again, this is all about hedging. Never expect to be 100% right. It's about trying to make sure that you're geared, that when you're wrong, so that you can, if you have 5 longs and 5 shorts that all have the right risk reward, let's say the market goes in your favor and your shorts all pay off. Well, if your shorts make you 10% and your risk on the other 5 longs is only 1%, well then you make 50% on your shorts and you only lose 5% on your longs. That math works out, doesn't it? Right? So, or let's say the market goes long and you lose money on your shorts. Well, then let's say you stop out. Let's say you risk. Let's say it's 3%. So you take 5 stocks that all lose 3% each. So 5 times 3, 15%. Right? But then you make 3 times your risk on the longs. So then 5 times 10, or 5 times 9, you make 40%. So 40% minus the 15, you end up with a total of 35% profit. That's what you've got to be doing here, is make sure that you are always, if your risk-reward management is good, then you can go about this market without worrying about whether you're right or wrong. Just simply, does it meet my rules? Is the risk-reward correct? And if that's the case, you shouldn't have any problems with it. Obviously, just make sure you avoid any earnings announcements is what I do. I will not hold a stock position into earnings. It's very dangerous because then the stop losses obviously don't work if it gaps down 10%. So that was the review there on what we talked about last night: FTAI, ATI, CAI, HLX. SALE, all stocks that, again, if we can get that really nice entry point, I'm looking at playing off the 5 and 9 day entry criteria, so they were all good for trades today, and then looking at very tight stops, essentially just below the low of the candle and below that 9 day moving average, looking for about that 1 to 1.6% stop loss is basically the magic number I find I'm using at the moment. So that should give you a good idea. Here's a new possible short, VCYT. This stock's rallied up from, low here of 459 up to just below $6. You can see it's kind of rallied into its moving average, and if you go back, you can see it's also it's gone straight down to previous what looks like high frequency trading support. So this could be a possible short, and so look right at this level where it is currently, essentially around what is it, 581 to $6, and I look at a stop loss just above that. So the high of today's candle was 602, moving averages at 608. So maybe we want to get a little bit higher. We'd look at an entry criteria, say for example at 591. And a stop criteria at 610. So we're looking about still a bit too much risk. So what's the high here? 602. So even 595, and a stop criteria at, because we can tighten the entry. Yeah, 595, and then a stop criteria 69. So 608, that'll be coming down. So if we look at it at 608, 609. So 595 to 609, which basically gives us 14 cents of risk. A retracement back down to support. You're looking at basically down to about 482. So we've got $1.13 reward, so we can risk a bit more than that. We can risk about, so I basically look at my stop loss at about 611, just to give it a little bit of room, and a 595 entry criteria, and then short down with a 482 target on VCYT. Okay, so that's another one of interest where it's where it's obviously in some real trouble. Okay, the other one I mentioned, Cree. considering like taking half profit. You can see it did rally up today, still under the moving averages, but that one's just kind of holding there. So that was something that just to keep an eye out on. But as I said yesterday, the all the other positions that we're currently in and stuff that Strath alluded to, still looking really good. PII didn't hasn't really had any kind of rally at all. It's still holding down. ACHC, still looking really, really bearish. So hopefully everyone's really doing well. I did get some emails about people who had were trading the weekly options and things on the SPY. Just keep in mind that our risk management strategy is to never risk more than 2% of our capital in any trade. So let's say I had $100,000 to trade. The most I would put into a high risk option trade would be maybe 4,000. And that is because, if it goes completely against me and I get out quickly, and I get out, basically where I know the trade is over, then that could quickly reverse, say, 50% on me. So I'll lose $2,000 of my trade, which means 2% of my total account. If you're in a position where you're losing, more than 2% of your trading capital, then you really need to look at how much you're actually risking in each trade. Now, that's just my personal feeling about how much capital I'm willing to risk and things like that. But obviously, everyone can have their own opinion. But if you're in positions where you're risking 10%, 20%, 30% of your capital in one trade, just maybe it's worth considering, is that something you are willing to risk, and so forth. So again, trading is not a race. It's not a destination. It's a journey. And the key trick to long-term success is lots and lots and lots of consistent patterns. You've got to have the goal in mind of if it's not about making one big win today and then losing it all tomorrow. It's about consistent wins over the next 10, 20, 30 years. That's going to make your capital really provide everything you're looking for return-wise, and have that nice monthly paycheck that's coming from your trading. One of my coaches actually told me one day that you should never be popping champagne bottles or crying over your breakfast when you're a trader. It should be boring. It should be just consistently looking for those base hits. So that's what's going to make you money. And when those base hits can provide a monthly income for you, where you don't have to be so worried about it, freaking out, or on constantly anxious. That's when, if you're feeling like that now, it's probably because you either don't have rules on your trades, you don't have targets on your trades perhaps, with stop losses. And if that's the case, look at them and decide what they should be. If you need help in using your technical skills, then that's what we're here. Not to advise you, but we can help you obviously with how you determine those. But so you're either not having a plan in place, or you've overinvested. Those are the two reasons why people get anxious, I feel, is that they're not invested with rules, so they feel like they're out of control, or they have overinvested, so they know if the rules don't work, they lose more than they're comfortable with. Either of those two things are very dangerous, and that's what I'll leave you with tonight. So that's your executive summary, and obviously we'll once we see how things go over the next 2 days, we'll be looking to add even more. But there's 1, 2, 3, 4, 5 short-term longs that we reviewed last night that have played out so far so good today and still have some potential value. Of course, VCYT, the new short, and as well as obviously there's other ones we've talked about, gold, SSP, Arden, lots to talk about, and of course we'll see you all in Trading Room tomorrow. Have a wonderful evening. Take care. And for those of you who have not signed up for our Oak Room membership, we did send out an email over the weekend. I know a lot of people may have missed it. So if you were wondering where that was, it is in your email box. It was sent out on Saturday morning, Pacific time, so just have a look for that. And of course, the Oak Room membership is available to all of our Gold Room members at no additional cost, just simply a 3-month commitment to the executive summary and trading room services. So we'll see you all in trading room tomorrow. Take care.